Good morning. Welcome once again to another live technical analysis session. We will be starting off with the euro against the US dollar. Yesterday, we had mentioned that following the breaking below of our upwards moving trend line, we would maintain a sideways bias for the pair's direction. As you can now see, the Bollinger Bands have narrowed. Well, I wouldn't say actually narrowed. They appear to be moving in a relatively sideways fashion. Note how the upper band of the Bollinger Bands is resting on our R1 resistance line, whereas the lower bound is on our S1 support line. So you can see the support and resistance levels are denominated in these text labels. You would still maintain a sideways bias for the pair. The reasoning behind the sideways bias that we are now currently maintaining is the RSI indicator below our chart, which currently registers a figure near 50. The 50 figure implies a relatively neutral market sentiment. Now, the issue with us saying that we're going to be maintaining a sideways bias would be ignoring the ECB's interest rate decision later on today. I would stay, I would maintain a sideways bias up until the decision of the ECB. It appears to have an 85% probability, according to market participants, for the ECB to cut rates by 25 basis points. So, in my view, that's already priced in. The potential for a 25 basis point cut is priced in into the market's price action. Now, attention as such may turn to the bank's accompanying statement or the speech of ECB President Lagarde. Now, given that we have started the EU parliamentary elections, I personally find it very difficult for the ECB, and in particular ECB President Lagarde, not to maintain a relatively neutral tone in her press conference. I think that the ECB would like to appear neutral, as in to avoid influencing potential voters or a potential outcome. So, given that we do have elections, I would expect them to take a more neutral approach. The issue with the ECB's accompanying statement is the preliminary HICP rates on Friday. Those came in higher than expected, implying an acceleration in inflation pressures in the euro area. As such, they may cut rates, but I would expect some hesitancy from ECB policymakers in its accompanying statements for future rate cuts. In such a scenario, we could see the euro gaining, but emphasis is on the accompanying statement and the press conference by ECB President Lagarde. But based on the preliminary HICP readings, we might see the euro moving slightly higher for the day. We are still on the 4 hour time frame. If it does move higher, so for us to adopt a bullish outlook, we would require a clear break above R1 at 1.0915. And then the next possible target for the bulls could be at 1.0980. Now, in the event that the accompanying statement and the presser appear to be relatively dovish in nature, i.e., implying that they may continue cutting rates in the future, we could see the euro weakening against the US dollar. And for a bearish outlook to occur, we would require a break below S1, if not also S2 at 1.0790. So breaking below S1, next potential target could be S2 at 1.0790. Lower than that, we have S3 at 1.0730. So that's it predominantly for the euro. So the key financial release is essentially the ECB's interest rate decision. Onto the USD against the JPY. As we said, it has tested twice that this is indeed a resistance level. We would still maintain our bearish outlook as long as it forms a new lower low. If it does not, we could maintain a relatively sideways bias between S1 and R1. We're keeping our support and resistance levels the same. The RSI indicator below our chart currently registers a figure near 50, implying a neutral market sentiment. But I think it was simply testing the resistance level and would not be surprised to see the pair move down towards the S1 figure. And just fixing the text labels, R1, R2, and R3. For the British pound against the US dollar, so you can see it is moving higher, once again testing resistance at 1.2805, which we had placed yesterday. Appears to be maintaining its bullish outlook in terms of the price action is still near the R1 level. It hasn't recovered or moved lower. It's still attempting to break above R1. The Bollinger Bands are tilted slightly towards the upside. The mid-range is also being respected. Note this candle here, 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 and here. As such, I would still maintain a bullish outlook for cable. The RSI figure below our chart, however, is at 55, which does imply a relatively neutral market sentiment. But if you look at the price action, we could still remain bullish as long as the pair breaks above R1 in today's trading session. If it does not, I would switch for a sideways bias and would not be surprised to see the price action drop down to S1 and stay between S1 and R1 up until the release of the US employment data tomorrow. Onto cable, onto the loonie. Moving once again in a sideways fashion between S1 and R1, RSI 50, narrowing of the Bollinger Band. The difference between USD CAD and GBP USD in terms of the RSI, as you can see, it's close to 50, and this one is also close to 50. It is also respecting the mid range of the Bollinger Bands. The difference is that cable is at R1, whereas USD CAD is not. USD CAD is below our R1 resistance level. As such, for USD CAD, we would maintain a sideways bias. For the Aussie, we do know China's trade balance is due out tomorrow, and in particular the imports rate, which are expected to potentially weigh on the Aussie. In such a scenario, it could break below S1, and the next target could be S2 at 0.6515, as the imports rate is expected to come in lower than the prior rate, which would imply potentially a reduction in demand for goods stemming from Australia, such as raw materials, and thus could weigh on the Aussie. Yet for today, up until the Asian session tomorrow, we would maintain a sideways bias between S1 and R1, narrowing of the Bollinger Bands, low market volatility, and the RSI at 50, also implying a neutral market sentiment. Moving on to oil. Oil does appear to be moving in a downwards fashion. This, for me, is essentially a retracement. Now, we are on the daily chart, not on the 4 hour. On the 4 hour, you can see it's retracing. It's close to 50, but still, if this 4 hour candle closes in the reds, reaching perhaps 73.15, it would be, for me, a continuation of the downward trajectory taken by crude oil. In the event that it does end in the greens, however, then we might see it moving up to R1, testing resistance before continuing on its descent. The daily chart, however, as you can see, close to 30 does imply that bearish tendencies are still in the oil market. Also note the EIA crude oil inventories figure, which registered an increase in oil inventories, implying a reduction in demand from US oil consumers over the past week. Therefore, if you consider OPEC statements, API, and EIA, it makes sense that oil might be moving in a downwards fashion. Such, we will still maintain a bearish outlook. But for today, if this closes in the reds at 73.15 or 25, so creating a new lower high, we will still maintain our bullish outlook. If it does close in the greens, however, so reverses direction, then we might maintain a slight bullish outlook up until R1 using the 4 hour time frame. But from a more macro perspective, we're still bearish on oil prices. Onto gold. So this is the 15-minute chart for gold. Now, note how it is bouncing off our support level at 2,360, which was our old resistance one. MACD turning negative, having dropped below the zero line, could imply that the bears are now in control of the commodities price action. Onto the 4 hour. Now, it has formed a new higher high. So for now, we could expect, or we could see, a more appropriate word, we could see a retracement back down to S1 at 2,350. On the daily chart, appears to be having broken above this sideways moving motion. 4 hour time frame, RSI close to 70. It's above 60, so it does imply some bullish tendencies, but might be due a small market correction lower, having formed a new higher high. And then perhaps we could see a higher low being formed around here before it continues on its relatively upwards direction. Now, our support and resistance lines are a bit tangled, so I will be removing them and replacing them. Make this a bit more clear. And we are on the 4 hour time frame. So for support at S1, we're taking this old high. This one here managed to break above and move higher. So 2,350 could be resistance now turned to support. Lower than that, we would take this previous low here, 2,300 2320.5 or 2320 would be sufficient. That would be my S2. And then my S3 would be an even lower low this week here, 2280. So that would be my S3 using the 4 hour time frame. Now, this in particular might not be favorable support and resistance levels for day traders, but if you're looking at it from a more macro perspective, it could provide uh, more helpful insight, I'd say. If you're using the 15-minute time frame, it's forming a new lower low. This could be a formation of a new lower high, but I would like to see this candle actually move below this low, so breaking below, and then perhaps your target could be at around 2,357. So around there, you might find the first level of resistance, or somewhere around here, 2,354. Somewhere we might see some resistance. Now, if it manages to break above this previous high, then and thus forming a new higher high, we could actually switch for a bullish outlook for the rest of the day. For now, though, I would be bearish. And as you can see here, this 15-minute candle is now turning towards the red, so bearish, but it is a 15-minute candle. 30-minute could be a formation of a swing low. So I would like to see this level being broken by either the 30-minute or the 15-minute candle. From a 4 hour time frame, as we said, forming a new higher high, might move lower to create a new swing low, so a higher low, before continuing on its ascent. But now we are on the 4 hour time frame, so these are our support levels. For resistance, I'm using these candles here. And note how this wicked up to the resistance level. So we were looking at this and then looking at the most recent price action. This appears to be a valid resistance level at 2,374. So that would be my R1. My R2 could be placed at this high, 2,397. So this wicks here. And then for R3, which is a bit difficult, you can see there is a bit of the price action here makes it slightly difficult for us to find an ideal resistance level. One could assume upon which breaking below this support level, it is now turned to resistance. And we'll keep it that we'll keep it at that level. Despite being a bit too close to RS2, it does appear that it might meet some significant resistance at this point in time. Well, not at this point in time, at this particular level. Let's turn this to red. And now we need to readjust our resistance levels. Fundamental factor that may affect gold's price could be the potential for a ceasefire agreement between Israel and Hamas. Should they agree to a ceasefire agreement, it could actually weigh on oil prices, on gold's price, which is considered to be a safe haven asset. Now, we are placing support and resistance lines using 4 hour daily time frames, but the key event of the week is tomorrow. Tomorrow is the release of the US employment data. So NFP Friday could easily change the current direction of the dollar and thus the other pairs associated, as well as gold, which is denominated in US dollars. So that is a bit of an issue. So anything that we do place for today could be easily broken tomorrow and might be invalid. The NFP figure is expected to come in higher than the previous figure, if I'm not mistaken, which could provide some support for the US dollar. There is a bit of an issue with JOLTS and ADP coming in lower than expected, implying a loosening labor market. But it all depends on the NFP figure, which is due to be released tomorrow. So whatever we've placed could still be valid tomorrow, but I wouldn't be using R2. So if these were my support and resistance levels tomorrow with NFP Friday, I will be looking at R3 and then S3. if you have a strong move in either direction. So it could easily break above R1, R2, and then target could be R3. Whereas if the dollar strengthens, could break S1, move towards S2, and then your next target could even be at S3, which is actually slightly lower than it should have been by a dollar. So 2,281, if we want to be precise. 2,082. And there we have it. Your support and my support and resistance levels for gold. 4 hour time frame, correction lower perhaps to 2,350 before moving higher. But it does appear to be a swing high. As such, this could be a retracement to lower ground before continuing on its ascent. Looking at the indexes, the Dow Jones 30 appears to be moving relatively sideways fashion, RSI 50, so between S1 and R1. S&P moving higher, breaking above R1, 5,325, new all-time high. RSI recuperating towards 70, does imply some bullish tendencies. Nasdaq as well, still moving slightly higher. RSI is still close to 70, respecting the mid-range. This for me is bullish as long as it breaks above R1. But the issue I have is with the Dow Jones. Dow Jones appears to be moving a sideways path, whereas the S&P 500 and Nasdaq 100 appear to be moving in a relatively upwards fashion. The issue is if I was personally looking at the indexes tomorrow, following the release of the US employment data, I would be more interested in the S&P and Nasdaq because I think they may have a more of a reaction to the release of the US employment data. Boeing's bullish outlook we had yesterday having broken above R1, 188.20. Next target is 200.45, which is our resistance level. Airbus still moving lower, currently testing S1, 152.77. Does not look good for the company stock price. Could drop below to potentially 147.65. Nvidia, of course, new all-time highs, moving higher and higher. 1,223.5 at its closing price, which is what we have here. Bullish outlook for Nvidia, RSI 77, strong bullish market sentiment. The issue is, though, if this was a breakaway gap, extension, breakaway continuation, and then exhaustion gap, we might see a reversal. RSI is above 70, it's at 77, so it could be due a market correction to lower ground. We're still bullish from a more macro perspective, but some caution for a potential reversal in the stock's price. Apple about to break our R1 level of 195.30, so validating once again our resistance level. Next target could be 212.20. Netflix bouncing off our old resistance level, slightly bullish as long as it clears this old high. Tesla still sideways, RSI 50. Nothing's really changed since we saw the company stock price yesterday. IBM breaking above resistance now turned to support. Might be an indication that the bulls might be regaining control of the company stock price. Intermediate resistance level would be at 170.50. So if it does clear above this level, we would maintain our bullish outlook. If it does not, switching back towards a bearish outlook. But for now, looking good for IBM. ExxonMobil, downward trajectory. Lower low, lower highs, lower low, lower high, lower low, lower high. Bearish for the company stock price. Look at the price action. Downwards moving trend line as well. But if you don't like a downwards moving trend line, just look at the swing lows and swing highs. That's 1, 2, 3, 4, 5. So it appears that with each movement is forming new lower highs and new lower lows, which for me is bearish Once again, RSI 14 does imply bearish tendencies. British Petroleum, not looking good for the company stock price. Note how it is actually now aiming for our S1 support level at 458.7. This is our S1, breaks below. Next target is 443.20 potentially for the bears. RSI is at 30, does imply a bearish market sentiment. So we are maintaining our bearish outlook for the company stock price. Other than that, we have S3, 423. If it does fail to break below S1, we would not switch for a bullish outlook. Instead, we would maintain a relatively sideways bias between S1 and R1. For a bullish outlook, it would have to clear R1 and move significantly higher. ARM does appear to be moving in an upwards fashion. Very nice upwards moving trend line. As you can see, being validated. I just need a slight extension here. Our old R2 is now the target, so R1. Old R1 was support, turned to resistance, turned back to support. Bullish outlook for the company stock price. We're now maintaining a bullish outlook on ARM. Disney does appear to be moving in a relatively downwards fashion. Or at 50, bit of an issue that it's still not clearing any prior lows. If it does move higher for today, bit of an issue. But you do have this high and then a new lower high. So it does clear this level, we would maintain a bearish outlook. And then what else do we have? Something interesting. Ferrari, very nice, but still sideways between 410 and 428. But if it doesn't clear 428, we wouldn't maintain a bullish outlook. Still sideways for now, so neutral. Intel bouncing off S1. RSI closing on 50. Sideways bias being maintained between S1 and R1. So in between 29.78 and 33.79. Those are our S1 and R1 resistance levels. We move on to the weekly time frame. Still some bearish tendencies. Daily chart recuperating nicely. Appears to be flattening out with the Bollinger Bands. Maybe the bears are seeding some momentum. Monthly chart pretty bad for Intel stock price. But still, JP Morgan sideways between S1 and R1. S1 at 195.35, R1 202.88. Amazon having broken above our downwards moving trend line. Now we would now maintain a sideways bias, no longer bearish. Between S1 174 and R1 183.25. Sideways between the S1 and R1 support and resistance levels respectively. If it does break above R1, next target would be 190.25, so 190.25 for R2. Higher than that, we do have 199.0 as our R3 resistance level. But we should also note, if it does break below S1, next target for us would be 165.87, which is our S2 level. But note the acceleration in the RSI. So it came down to 30, but it wasn't higher highs and higher lows. It was a very nice increase. So this could actually be a sustained bullish momentum when compared to this decline. So let's see. Tipped from the low, from the new higher high on the RSI. This is what we're looking at. Came lower, came back up. So you can see it's a bit more smooth. Whereas this indication here, for me, is slightly bullish. We could maintain a bullish outlook as long as it manages to clear above R1 at 183.25. This does show for me some bullish signals, but the Bollinger Bands are narrowing. Not narrowing, they're smoothing out in addition to the 100 and 200 moving average as well, which might imply a relatively sideways motion. But this is an acceleration. We might see it actually potentially breaking above 183.25 later on today. If it does not, sideways bias. And I think we do have time for one more. If there is anything you would like to see in particular, now is the time to ask. If not, I'll just do one more and then we're done. PY Aussie oil plus. For Nvidia, please do note that there is a stock split occurring on Friday, so the price will be readjusted on Monday's open. And if I'm mistaken, it was a 10-1, so it's going to be 112 point something per stock, depending on how it closes on Friday, of course. Apple bullish, as you said. Netflix bouncing off R1. Target is for us our old R3 level, 647.30. It does need to clear this high, as we did say before. I think more or less that's it for today. On a weekly time frame, broken two previous highs, but then form new higher high. Did form a higher low though. If it stays above this level from a more macro perspective, we could maintain a bullish outlook for the US dollar. And with that, that does it for today. Thank you very much for watching, and I'll see you all next time.
Hey, thanks for waiting, everyone. Let's go ahead and get started. So, welcome to this week's webinar on the second part of our Fibonacci series, which will be on Fibonacci extensions. So, before we get started, as per usual, a risk warning. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. A disclaimer: the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay, so I'm Melanie. I'm an investment analyst from Everest Fortune Group, who are finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, so here is our agenda for today. We will do a brief recap of the Fibonacci retracement essentials that we went through last week. And then we'll look at ideal market structure. So what are considered significant swings, how you can follow market trends, and then the different Fibonacci retracement levels, followed by this week's Fibonacci extension slides. So then we'll look at Fibonacci confluence and how you can combine what we learned last week, so Fibonacci retracement, with this week's extensions. Okay. Feel free to let me know in the chat throughout the webinar if you guys have any questions. Let me just change the settings so that you can ask me in the chat or Q&A. Okay, should be okay now. Okay, so let's get started. So starting off with a quick history lesson on the origins of Fibonacci. So Fibonacci retracement levels were named after Italian mathematician Leonardo Pisano Bigolo, who was famously known as Leonardo Fibonacci. So, however, he did not create the Fibonacci sequence. Instead, he introduced these numbers to Western Europe after learning about them from Indian merchants. So, Fibonacci retracement levels were formulated in ancient India between 450 to 200 BCE, and the sequence is also referred to as nature's numbering system. It's often observed by known people in flower patterns, hurricane patterns, and galaxies. So here's our recap on last week's Fibonacci retracement. So a very simple checklist to follow when you're first starting out with Fib retracements, and I guess some things to look out for. So firstly is the market structure clear. So we want to look for big zigzag patterns, and we'll show you some examples in the coming slides. Next, we're looking for recent trends. So we want to identify, is the trend going up or down? And it's always important to follow the general trend. Next is to identify recent major swing lows or recent major swing highs. Again, we'll show you some examples of those. And we want to connect the two extreme points like you see in this slide here. So we're starting in this example because it is a downtrend. So we're starting from the highest point and then ending at the lowest point for a downtrend. And then if it's an uptrend, we're looking at the lowest to highest points. So here's an example of a clear market structure. Okay, so although Fib retracements and all the different Fibonacci techniques can be used in both choppy and trending markets, it's still important to look for clear market structures regardless of what technique you are using. So here's an example of a clear market structure, and here's an example of an unclear market structure. So one of the ways to identify a clear market structure is actually by adjusting the time frames in order to get a clear market structure for you to conduct your Fibonacci analysis on. Okay, so what may look messy on a M30 chart might actually look very clear on an H4 chart. So if there's too much chaos in the shorter time frames, it doesn't mean that the entire currency pair is not able to be analyzed at that point in time. So it just could simply mean that you need to take a step back or sometimes a step forward to get a clearer view. So in this example, you can see we have a pretty unclear market structure from the 15-minute time frame. So it's quite messy. There's no clear movements in price, and when we change it to the 1 hour time frame, you can see that the highlighted portion has a much clearer market movement. Okay, so there's basically two criteria that you should look out for. Firstly is a clear swing low. So the clearer the swing high, the clearer the trend between these 2 points, and the more accurate your Fibonacci retracement will be. Okay, so I guess now we'll briefly go through what conditions to look out for when we're using the retracement tool and how we can use it on both MT4 and TradingView. So if we have time at the end of this webinar, I will do a brief market analysis. Feel free to let me know if you have any requests in the chat, and we can do a bit of Fibonacci analysis on TradingView as well. But starting off with MT4, Okay, so here's just the layout on MT4 if you're unfamiliar. So now let's zoom into our toolbar. So when you hover your mouse over this option, where my mouse is here, it should say draw Fibonacci retracement. So you just click on that, and you can click on wherever you want your Fibonacci retracement to be. So it should come out looking like this. And if you want to add or edit any Fibonacci levels, you simply right click on the Fibonacci trend line, and then so it's pretty faint over here. There is a red dotted line. Yeah, but this is what you will get when you right click on it. So you click on Fibo properties, and then under the Fibo levels tab, you can then click add, and you can proceed to add whichever levels you wish. Okay, so here you can see, yep, it'll look like this. I click add, and then I've added a negative 0.618 level, which is essentially just minus 61.8%. Okay, so now looking at Fibonacci retracement tool on TradingView. Okay, we have a typical layout. In this case, we're looking at pound dollar for this example. But basically, you click on the Fibonacci retracement tool, which is the symbol with the 4 horizontal lines over here. So you can find this, I think you can find this on the top bar or the sidebar. Yeah, here you can see I've circled it out. And then after you've connected your Fibonacci trend line, this floating bar will pop up over here. So when you click on settings, this selection box will appear. So you can select any other levels that you wish. So if you weren't here for our previous Fibonacci session, I'll show you guys in a little bit, but depending on which Fibonacci technique you're using, we will look at different levels. So let's say in this case, I'm looking at all of the relevant levels from negatives to more than 100. And when you're first analyzing the levels, you want to kind of select both negative, mid-range, and above 100 so that we can view all 3 Fibonacci types at once. So this is what I mean here. From minus 61.8 to 161.8. So the negatives are what we call Fibonacci expansion. Okay. Today we are going through the above 100s, which are the Fibonacci extensions. So we are using the 127.2 and the 161.8. And next week we'll be looking at the expansions, so the negative levels. And last week, the retracements, we looked at the mid-range levels, so 23.6 to 78.6. Okay, so yeah, we'll go through expansions more in depth in the next webinar. So I'll just briefly introduce these levels now. And if you look at the GIF that I've included here, this is the kind of shape that we're looking for. And this is how exactly you should draw your Fibonacci retracements. Okay, another example here, you can see all the different Fib numbers that we mentioned in the previous slide and how it looks drawn out. So basically just take note of the starting point and the ending point of your Fibonacci trend line. So in this case, you can see the general trend that we're looking at is a downtrend. So the starting point is 100%, ending point 0. Okay. In this case, this is also another example, and we can see that price bounced off the highlighted area of 61.8% at the Fibonacci retracement level here. Okay, here's another example. In this example, we're looking at the 38.2% Fibonacci retracement level, and this is in line with the overlap support at the 32544.21. So you can see price bounced off of this highlighted area here. So if you are unfamiliar with what an overlap support is, you can stay tuned for our support and resistance webinars where we go really in depth into overlap and pullback support and resistance. But really briefly, overlap basically means that there are swing highs and swing lows that match up at the same level. Okay, and those tend to be really powerful or really significant levels, especially if they line up with our Fibonacci level that we have over here. Okay, another example here. So here we have two Fibonacci retracements. First one is from the top to the bottom over here. And we have 61.8% that lines up with our 0.92637 level. Okay, and next we have another level, or rather another retracement from the bottom to the top over here. And we have 61.8% Fibonacci retracement again that lines up with the 0.91614 level. Okay, and for this level, we actually have it matching up with two swing lows. So this makes it a pretty significant level. Okay. Okay, just a really brief example of an expansion. So for an expansion, we are looking for a flash kind of symbol or lightning bolt symbol. So here you see in this example, it kind of looks like a lightning bolt from the arrows. So starting point is here, ending point is point 2. And here we're looking at the negatives, as I mentioned earlier, for expansion. So expansion, we're looking at minus 27.2 as well as minus 61.8. So in this example, we can see the 61.8% lines up with this swing high here. So we're expecting price to bounce off of the 61.8% level. Okay, and we're projecting it to hit down towards the minus 27.2%. Okay, and you can see this is the outcome of that. So you really have confirmation that price is going to hit downwards once price breaks out of your initial ending point, which is at point 2. So that's how you combine a Fibonacci retracement with your Fibonacci expansion, since they both use the same tool, just that we're looking at different levels. Okay, so you can see here, once price broke below our ending point at point 2, we have confirmation that it's going to hit towards our minus 27.2, which it did, and it bounced up nicely from the minus 27.2% Fib retracement and hits back up to the ending point, which it normally does after bouncing off either the minus 27.2 or the minus 61.8. Okay, so let's get into this week's Fibonacci extension. So here is an example of price reacting off the 161.8% Fibonacci retracement level, resulting in a reversal. So in this case, extensions, we like to look for Nike tick shapes. Starting at the starting point will be here, ending point over here. So we are taking, how you draw your trend line is you're basically drawing the head of the tick. Okay, and the projected level is either 127.2 or the 161.8 like we see here. So price has broken out of the 127, so we're projecting it to bounce off of the 161.8, which it did, and results in a reversal over here. Yeah, before we move on, I'll just show you guys the Forex Army page. Let me see. Okay, so in this website, you can see how exactly you can draw a Fibonacci retracement correctly. So, yeah, basically everything that I've gone through today, last week, or future webinars, most of the information will be over here. So you can see the clear structures that we went through earlier, how you can follow price structure. Yeah, and there's clear steps on how to draw your Fibonacci retracement, some examples. So feel free to check out this website after this webinar. Yeah, it also goes through Fibonacci confluence, which might be a little bit confusing since we are combining all the techniques. Yeah, so you can see over here, we have a bunch of examples. So yeah, let me just pop it into the chat for you guys. Okay. Now let's look at when does a Fibonacci retracement become invalid. Okay, here. So one of the most common scenarios of this is when price makes a lower low. So assuming you are drawing a Fibonacci retracement from the top to the bottom, or if there are bars on the right that break your ending point, then it becomes invalid. So I think we have a bunch of examples of this later on. Yeah, so just because it becomes negative doesn't mean that it is invalid, because we've already gone through that Fibonacci expansions are negative levels. Okay, but I'll show you guys some examples later on. Okay, let's combine some Fib retracements. So we have three different methods here. Firstly, we have the minus 27% Fib expansion. And this lines up with a 161.8% Fib extension, and then the 78.6% Fibonacci projection. So what we want to take note of from this example is basically the shape of all of these trend lines. So firstly, the extension, you can see the Nike take. Over here, it's kind of an inverted Nike take. So the head is here, the gray arrow, and then the tail would be the long black arrow. Fibonacci projection also uses a lightning bolt shape similar to the expansion, so you can use those together. So Fibonacci expansion, you can see the trend line that we are following from the red arrow, and then for Fibonacci projection, we are looking at the black arrow. Okay, and we can see that price bounced off of the Fibonacci confluence area over here. So that's how you use confluence. Another example. Here we have 61.8% Fibonacci retracement, matching up with a 100% Fibonacci projection. So in case you can't see the lightning bolt shape, I've drawn out the arrow. So the yellow arrow here is the Fibonacci projection, and the blue arrow, which is just a one straight line, is your Fibonacci retracement. Okay, and we can see price bouncing off of that confluence area there. Okay, another example here. So here we're using retracement and projection. So the 23.6% Fibonacci retracement is just one line following from this bottom here to the top here. And that is in line with our 61.8% Fibonacci projection. So for projections, it's 3 points. So we have a starting, middle, and ending point. And we can see price testing this level here. Okay. Okay, so let's backtrack a bit and look at how exactly you can use these retracements. So how do you identify clear market structures? Firstly, we want to look for significant swing highs, swing lows, significant trends, or clear market trends. So let's first look at an incorrect example. Here's an example of insignificant swings, which are bad points to use for Fib starting and ending points. So you can see it's really messy. The price movements are too small and there are no significant swing highs or lows. Another example is over here. So there's no clear swings, no clear market structure. Price movement is too small to use any kind of Fibonacci technique here. So here is an example of significant swings. Okay, we have a clear move up and down. We have obvious peaks and troughs and very clear market movement as well. And here's another example. So I've drawn out the peaks and the troughs to show you exactly how clear it should be. Okay, and following the market structure. So we want to pick market structures with a clear upward or downward movement. So your Fibonacci retracement trend line can follow that movement. And this works better on higher time frames due to there being less noise. So by higher time frames, we mean H1 onwards. So H1, H4, daily, weekly, depending on your trading technique as well. Okay, so you can see this is an example of not following the market structure. So this is how not to draw a Fib retracement trend line. You can see we have a zigzag here, okay, but instead we are drawing a Fib trend line through the price structure, when instead we should be following it exactly. Okay, so when your retracement is cutting through the market structure, it makes it less effective. Okay, so for our Fibonacci extension, getting back to this week's topic, again, the tool that we use is Fibonacci retracement, and the percentages are 127.2 and 161.4. And here we're looking for a Nike tick, like you see in the GIF here. Okay, and these tend to be quite powerful setups. If they don't react off of the 127.2, then we're likely expecting it to react off of the 161.8. Okay, and these usually retrace the entire move from point 1 to 2, hence the retracement tends to be more than 100%. So the clearer the movement of the Nike tick, the better. So you can take a look at this GIF over here. So you can see it did test the 127.2 slightly, but it still broke out of it and reacted off of the 161.8 before reversing back down. Okay. Okay, so another example here. So for Fib extension, in this example, we are looking at it reacting off the 161.8. And then we see a reversal here. Yeah, I think we saw this earlier, so I'm going to skip that. Here's another example. So this is on the daily time frame. And you can see that there is a swing high that's in line with the 127.2. It's quite small. So these, obviously, the clearer the Nike tick, the better. But if you have a small movement like this, that works as well. So if we zoom in, because this is on a daily time frame, so if we zoom in and view the same chart on a H4, we can get a clearer view. Yeah, so you can see here the Nike tick is a lot clearer. Okay, and this is on the same chart. So we can see how price reversed nicely off the 127.2% Fib extension level here. Okay, and here earlier I briefly mentioned an inverse Nike tick. So in this example, you can see it a bit clearer. Starting point here, ending point here, and then the tail would be from the 0% all the way down here. Okay, so as long as it retraces 100% of the tick, then it can be considered a tick. You know, as long as it reverses 100% of the V shape, then it's considered a tick. So we want to take note of the swing low support at 0.91565 in line with the 161.8% level. Okay, so this makes it a strong support level where price bounced off of. Okay, so we'll talk a bit more about combining the different fit methods as well as the support and resistance levels so that it increases the accuracy of your analysis. Okay, let's move on. So we talked about invalid Fibonacci retracements earlier. Okay, and I did mention as well that the fit retracements that are negative are still valid. Okay, and this is an example here. So our starting point is here, ending point here. Um, price breaks our ending point, as we see from this area over here, um, under the red arrow that I pointed out here. And once it breaks out of it, it's no longer valid. So basically, when it breaks out of your 0.0% level and has made a lower low, that's an example of an invalid retracement. So you want to remember to always pick the lowest point with nothing on the right of the ending point. So your ending point is here. We don't want anything lower than that over here. Okay. Let's quickly get into Fibonacci confluence. We briefly talked about it, but I'm gonna get a bit more in depth into the extensions. Okay, so we looked at this example earlier, but it's basically multiple Fibonacci levels. It doesn't have to be retracement only. As long as there are Fibonacci methods that line up nicely, it's considered confluence area. So you're basically lining up these levels so that you can increase the probability of a bunch of Fibonacci levels working versus a single Fibonacci level working. Okay, so yeah, we looked at this example earlier. So in this example, we have two fit methods. Okay, I mentioned earlier the Fibonacci extension, which we just went through, and the Fibonacci projection, which uses a lightning bolt symbol. So our 61.8% Fibonacci projection, like you see here, lines up with the 127.2% Fibonacci extension. So the Nike tick, if you can't see, the head of the Nike tick is from here, this swing low to this swing high. And because it has surpassed 100% of it, or it's retraced 100% of that, the head of the V shape, then we can use it as our extension. And for our projection, we are looking at this starting point here, middle point here, and ending point at the swing high. Okay, for projections, we use 61.8, 78.6, and the 100%. So here we're looking at 61.8, which lines up nicely with our 127.2% extension level. Okay, and you can see how price bounced off nicely off of that level. Okay, but in this case, you can see it's just the wick of the candlestick that's just touching that area. So we'll go through in a bit how exactly you can maximize your chances of catching this reversal since it is just a candlestick wick. Okay, next let's look at another example. So here we also have two Fibonacci methods. We're using extension and projection again. Our extension here is not an inverse extension. Okay, so we have the hit, the starting point at the swing high, ending point at the swing low, and it is past 100% of the V shape, as you can see here. So that's why we're looking at 127 and 161.8. Fibonacci projection wise, we are looking at the lightning bolt shape again. So starting point here, middle point here, and ending point here. Okay, so 100% Fibonacci projection lines up nicely with our 127.2. In this case, we can see that our 100% also aligned, or rather our 78.6 Fibonacci projection also lined up nicely with the 61.8% Fibonacci retracement. Okay, but it already surpassed that, so it's no longer valid. Okay. Okay. Last example, I think. But basically in this example, we are looking at an expansion and an extension. So for expansions, remember we're looking at the negative levels. So for expansions, we're also looking for a lightning bolt shape. So the lightning bolt shape is like this. The minus 61.8% lines up nicely with our 161.8. So you can see that the minus 27.2 expansion also lines up nicely with the 127.2. So when we identify these two confluence levels, we would first wait for price to break out of this confluence area before going in for buy towards this confluence area here. Okay, in this case, obviously it broke out of it, so we were going for that buy. But if we didn't know that it was going to break out of it, we would first going for buy towards this area here first. Okay. Okay. Okay, this is our last example. So in this example, we have the minus 27.2% expansion, which is the blue arrow. Okay, and that lines up with our 100% Fibonacci projection, which is the lightning bolt shape. Starting point, middle point, and ending point, as indicated with the orange arrows. And then the purple is our Fibonacci extensions, or in this case, we have an inverse Nike tick. Okay, so we have minus 27.2, 100%, and 127.2 lining up. So we can see that price bounced off nicely off of this very strong support level. Okay, so normally you would try to get as many Fibonacci techniques as you can, lining up at the same level, because that gives us a stronger confluence area. Okay, so it's a more effective indication that price is going to bounce off of that, or reversal is going to happen. Okay, so let's talk a bit about trade management. So earlier I showed you guys how sometimes with confluence areas, you can expect a very brief reversal. So a very brief touch on our confluence area before it starts reversing off of it, especially when you have a very strong confluence area with multiple Fibonacci levels lining up on it. So in order to avoid missing your trade, this is the trade management technique that we like to follow. So firstly, your stop loss would be placed beyond. So this means that you would place your stop loss beyond a key Fibonacci confluence area. So the reason for this is because more often than not, price is attracted to such strong areas of confluence, and if your stop loss is right before instead of beyond it, you will most likely get stopped out before the market reverses. So that's basically what I mentioned earlier. In this example here, um, we're going in for a buy. Okay, so our stop loss will be placed below your Fibonacci confluence. And your take profit, we recommend you to place it before. So in this case of a buy entry, we would place our take profit below the confluence area. Okay, obviously these will be switched if you are looking at a sell entry. But yeah, basically the standard rule is that stop loss will be placed beyond a key Fibonacci confluence area and a take profit will be placed before it. So before means that you should place your take profit, in this case, below the confluence area. Reason for this is because when price reaches the confluence area, there's a high chance that it will not be able to go beyond it. And instead of reaching your profit target, it might reverse back to your entry, or even worse, your stop loss right before it reaches your take profit. Okay, so that's also one of the reasons why people complain that the market is being manipulated because they miss their take profit by 1 or 2 pips. Okay. Okay, let me know if you guys have any questions. We still have a bit of time. So I'm gonna pull out my charts, and if you guys have any requests for any currency pairs you'd like me to go through, feel free to pop them into the chat. Okay, I got a request for okay, DOW30. Let's go ahead and look at that. Mm, can you just really quickly drop the ticker in the chat? I can't seem to find it on TradingView. Is it this one? Is it this? Okay, let's go ahead and analyze this first. Can you guys still hear me? Okay, let's continue. So, let's start off by looking at it on the higher time frames. Okay, so okay, we can see a general downtrend on our daily time frame. Let's look at our weekly time frame. Okay, weekly time frame is pretty bearish as well. Okay, okay, I'm just gonna go in and add some support and resistance levels. So here's our first resistance. Here's our first support. And here's our second resistance. Okay. Okay, let's look at our 4-hour time frame. So we kind of have the same levels here. This is our first support. Yeah, okay. Okay, let's look at Dow Jones. Okay, so same thing, we're gonna look at the higher time frames first. So it's pretty bullish, okay, on our weekly time frame, on our daily time frame as well. Okay, here is our first resistance. Okay, this is our first support, and I think this would be our second support. Okay. So if we're looking at our retracement, we're looking at the mid-range first. So we have these 5 levels, 23.6 to 78.6. And I can see that my 38.2 lines up nicely with my first support. Okay. Let's see. Okay, let's look at this on our 4-hour time frame instead. Okay, it's pretty similar. Okay, now I'm gonna look at a projection. So for projection, we use these 3 levels. Okay, and okay, actually here I can show you guys an example of a Nike tick. Okay, we're looking at the above 100 levels. Okay, so 127.2 and 161.8. And you can see the shape of the Nike tick here, right? So it's surpassed 100% of the V shape, which is why we can use it. And you can see price actually rebounded off of the 161.8 level, just as we suspected or would expect. Okay. So yeah, that's an example of the Nike tick or Fibonacci extension that we went through today. Okay. Let's see. So because of that reversal of the 161.8, we can expect it to continue to go down towards this level now, which is our 23.6 level. Okay, so I might just put an indicator there. Let's see if we have previous levels. Okay, kind of have this level here as well. This would be just an intermediate level. Okay, that I'm expecting price to hit towards. Okay, now let's look at some indicators. So I like to start off with Ichimoku and MACD. So if price is moving below the Ichimoku cloud, it is a bearish signal. And if it's moving above, then it's a bullish signal. So in this case, we see price moving above, so it doesn't support um our analysis that price is going to drop down to this level here. Okay, so I'm going to get rid of that. And MACD, you can see that it does support my analysis. So I can keep that. And let's look at RSI and stochastic. RSI, you can see very obvious downtrend. So it also supports my analysis. Let's look at stochastic. Okay, stochastic as well. Okay, let's look at maybe Bollinger Bands. Okay, so you can see that on our Bollinger Band, price is moving out, or it's breaking out of the bottom band of our Bollinger Band. So it's also supporting our bearish analysis. Okay, so out of the five, 1, 2, 3, 4, 5 indicators that we've used, 4 out of 5 of them have given us a bearish signal, which supports our analysis. Okay, so because there are so many indicators, 50% of them will give you bullish and 50 will give you bearish. So it's important to just learn a couple that you're comfortable using, that you know how to use, and then stick with those. Use those interchangeably to support your analysis. And yeah. Okay, any other requests? I think we have time for maybe one more. Okay, no worries. Okay, let's look at gold. So on our weekly time frame, it's pretty bullish, right? On our daily time frame, also pretty bullish. Okay, there's not a trend line, but let's see if we have a trend channel. Okay, I think we can see price breaking out of the trend channel. Okay, we might see it break out a bit. Okay, let's go in really quickly with some levels. So this is our first resistance, our first support, and our second support. Okay, on our 4-hour time frame, okay, I'll just show you guys an example of a Nike tick again. Here, okay, you can kind of see this Nike shape or tick shape. Okay, and you can see it bouncing off of the 161.8. Okay. Yeah. And okay, so this would be my first resistance. This is my first support, and then my second support here. Okay, so going in with a projection again, it's in line with my 61.8. Mm. Okay, my 38.2 lines up with my first resistance. Okay, and okay, I think that's about it. Okay, so my 23.6 also lines up with my first resistance, and so does my 61.8. Okay, so we have this confluence area here. And this is also a pretty significant level of overlap, okay, because we have a bunch of swing lows lining up as well. Okay, now let's pull out some indicators. Okay, price is moving below the Ichimoku cloud, so it's giving us a bearish signal. MACD is also giving us bearish signal. If we look at RSI, okay, RSI isn't telling us much. Let's look at stochastic. Oh, okay, so we have a bit of divergence here. So price has made a higher high on our price chart, whereas on our stochastic, it's making a lower low. So this is a bearish divergence and could suggest that price is going to continue to break below our first support. Yeah, but we'll have to see because this is a pretty significant level here. So you might see a bit of a jump. Okay, if I zoom in, you can see price already increasing here. But ultimately, because of all the downward pressure, we might see it continue to drop below the first support. Okay, maybe let's look at moving averages as well. Okay, so the SMA and EMA price is moving below both of these indicators and it recently crossed over each other, which could suggest a change in trend. And it's been pretty uptrend recently, and now we're seeing a downtrend. So that could be because of that. So also supports our bearish um, analysis. Okay. Okay, I think that's all the time that we have for today. Um, Let me see if we have any other questions. Okay. Okay, if there's nothing else, thank you guys so much for joining me today. I hope you guys found it helpful. Have a great rest of your week, and I'll see you guys next week. Bye, everyone. Thanks, everyone. Bye.